Hi guys, welcome to the monthly market review. Today I'll start with US economy, and in the later videos I'll also talk about global economy, about Indian economy, and also about Indian equity markets. I hope my screen is visible. Just a second. Yes. So अगर हम यूएस इकोनॉमी को देखें तो कुछ दिन पहले तक इन्फ्लेशन और अर्निंग्स वेजेस ग्रोथ वेर रनिंग अहेड ऑफ फेड्स कंफर्ट जोन. But now, for the first time, inflation came below market expectation, and let's hope that this red line of USPCI falls faster and merges with the hourly earnings rate. Fed ने ना कि सिर्फ interest rate बढ़ा रहे हैं, but it is also taking out liquidity as much as the faster pace. Total liquidity is down from around 248 billion 248 billion from April till December. ये बहुत ही, as you can see here, कि जिस तरीके से the liquidity is coming down. Also, one very interesting thing, this is a very rare phenomenon. This has happened only thrice in US history, जहाँ पे दोनों bond market and the equity markets have given negative returns. The total loss in the debt market as well equity market this time is at about $92 trillion. It is more than what we had seen in the subprime crisis. The mortgage rates of US are now high in single digit. The gap between Indian and US mortgage rates has come down dramatically over the years. As housing interest rates have gone up, housing applications have fallen through the cliff. This has also resulted at the laying off of the mortgage staffs in US. Now, as interest rate goes up in US, their budget comes under pressure. As of today, US interest rate at $716 billion is one of the highest in their budgeted history. As budget is witnessing higher interest outflow to deficit, which had started correcting from COVID period of 4 trillion to under a trillion, is now back at 1.3 trillion. More importantly, Fed, when they issued the press release after their last FOMC meet in November, it was very dovish in talking. But when Jeremy Powell, the Fed chairman, he came to the press conference, he mentioned that rates will have to go higher. And जो rates high जा रहे, they will stay higher for longer. He also mentioned that the terminal Fed rate is likely to be above 5 rather than 4.63 as expected by the market. Fed also says that they will not risk inflation, but they will try to risk recession. As we can see that it's very getting difficult for US because of the layoffs, and they think that they can very quickly cut interest rate if they do recession play. So let's hope that US is wrong, but they are more likely to commit type 1 error of raising interest rates more than necessary in order to control inflation. Now, can inflation fall as money supply growth has started tapering off? This was the chart where we had put well before yesterday's data was announced, and clearly one can see a reasonable amount of correlation between money supply and growth with inflation. Now, the length of how money supply growth has come down to mid-single digit or low single digit. Can inflation also fall thereafter? Well, that's the million-dollar question. The other thing which US will have to grapple is with their deficit. Their deficit is high and they will have to issue lots of US Treasury. Unfortunately, appetite for buying US Treasury has started coming down. The foreign holding of US Treasury has come down from the high of 34% to about 24%. Partly this is because US Fed has been the buyer of the last resort. but partly it is also because countries are selling US Treasury bond to fund their FX outflow. Will US keep interest rates higher in order to attract foreign capital? Now, again, that's one factor which we will have to watch out for. The other interesting thing from the equity market point of view, whenever Fed makes a pivot, that means from raising interest rates, whenever they come down to cutting interest rates, invariably there is a correction in the market. Also, there is a reasonable amount of correlation between Fed pivot and market correction. Will this time be different? Today's equity markets all over the world have run up based on yesterday's rally in Dow Jones and SP 500. But if history is a guide, whenever Fed has started cutting interest rates, invariably equity markets have also come down. Now we need to wait and watch how does the policy of US Fed and the equity markets in US react to all of this. Well, that's it for this month's views on US markets. Stay tuned